Options Trading Explained, a beginner's guide. Options trading is how investors can speculate on the future direction of the overall stock market or individual securities, like stocks or bonds. Options contracts give you the choice, but not the obligation, to buy or sell an underlying asset at a specified price by a specified date. Options are tradable contracts that investors use to speculate about whether an asset's price will be higher or lower at a certain date in the future, without any requirement to actually buy the asset in question. Nifty 50 options, for example, allow traders to speculate as to the future direction of this benchmark stock index, which is commonly understood as a stand-in for the entire Indian stock market. Here's how the premiums, or the prices, function for different options based on the strike price. When trading options, you pay a premium upfront, which then gives you the option to buy this hypothetical stock, call options, or sell the stock, put options, at the designated strike price by the expiration date. A lower strike price has more intrinsic value for call options since the options contract lets you buy the stock at a lower price than what it's trading for right now. If the stock's price remains 100 Indian rupees, your call options are in the money, and you can buy the stock at a discount. Conversely, a higher strike price has more intrinsic value for put options because the contract allows you to sell the stock at a higher price than where it's trading currently. Your options are in the money if the stock stays at 100 Indian rupees, but you have the right to sell it at a higher strike price, say 110 Indian rupees. Options contracts give investors the right to buy or sell a minimum of 100 shares of stock or other assets. Deciding not to exercise options means the only money an investor stands to lose is the premium paid for the contracts. As a result, options trading can be a relatively low-cost way to speculate on a whole range of asset classes. With call and put options, you need the underlying asset's price to rise or fall to break even, which is a rupee amount equal to the premium paid plus the strike price. Options trading strategies can become very complicated when advanced traders pair two or more calls or puts with different strike prices or expiration dates. Traders need to choose a specific strike price and expiration date, which locks in the price they believe an asset is headed toward over a certain time frame. Because options contracts have an expiration date, which can range from a few days to several months, options trading strategies appeal to traders who want to limit their exposure to a given asset for a shorter period of time. Options traders need to actively monitor the price of the underlying asset to determine if they're in the money or want to exercise the option. For example, if you own shares of a company, you could buy put options to mitigate potential losses in the event the stock's price goes down. As a result, options trading can be a cost-efficient way to make a speculative bet with less risk while offering the potential for high returns and a more strategic approach to investing. There are essentially three decisions you must make with options trading: direction, price and time, which adds more complexity to the investing process than some people prefer. To make money from options trading, you'll need to set price alerts and keep a close eye on the market to see when your trade becomes profitable. And you'll need to be mindful of the risks and trading fees that can add up with various options strategies. While many brokers have eliminated fees for trading stocks or exchange-traded funds, ETFs, these still exist for options. Commissions may range from a flat rate to a per contract fee based on the amount you trade, both when you buy or sell options. As a result, options traders must take into account these fees when considering the profitability of an options strategy. As with any other type of investing, it's best to educate yourself thoroughly before you begin and use online simulators to get a feel for how options trading works before you try the real deal.